will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. Welcome back to our currency monthly webinar. For the month of August, we'll be starting the webinar. We saw last month most of the major economies, central bank raised their interest rate, which was more on the expected lines. Market had already incorporated that. In the month of August, on 10th of August, we'll see how the Central Bank of India, the RBI will present their policy and what they bring on table. Very interesting month for Indian per se economy. What will be lined up? So we have with us Mr. Dilip Parmar. He is a research analyst, and not wasting much time, I hand over the dais to Dilip sir. Dilip sir, over to you for the webinar.
Thank you, Samir bhai. So before moving into the what could be the plan out for the August, we first look at on the what happened during the July month. As you can see from the this table, uh, yeah. So as you can see from the table that the dollar index has retreated, and at one point of a time we have seen the level of 99.50 odd level, but some of the lost ground has been recovered, and it ended the July month with a loss of a percentage and closed at 101, right? So what we have earlier witnessed that the 100.80 remain the multiple bottom support, and we have seen that the huge short buildup has been seen on the global front at a time when we have seen that the CFTC data show that more than $20 billion kind of a short positions has been created in the dollar itself. What we have seen that the euro and pound has been recovered in the July month, but if you go by the August month, it was at quite a different point just because we have seen that some kind of a short covering bounce has been happening in the dollar index. Apart from that, the policy stance which has been uh, uh, delivered by the Europe and Bank of England and Bank of Japan, all three were some of the kind of a trend reversal kind of a triggers which we have seen. Going back to the rupee has been depreciated 0.26 percentage in the July month. Uh, if you go by the other currency like a South Korean won, African rand, Canadian dollar, Swiss francs, and Chinese currency, all this currency has been appreciated. If you go by the last quarterly basis performance, some of the commodity currency has been appreciated, but you can see that the Asian currencies and the major currencies remain under pressure against the dollar. Next, move to the commodity side. As you can see that the crude oil prices has rebounded somewhere around 16%. So that has been reflected in the commodity currency which has appreciated. While the net importer like India, we depreciated against the dollar. Going by the 3 months performance, we can see that the crude has been outperforming while the gold and silvers remained on a negative side. So ultimately, July was the month of the commodity currency and the commodity month, and the same has been reflected in the commodity currency. Going by the risk assets, most of the risk assets has outperformed as there is a multiple things has been happening around the world, and particularly the way the central bank policy stands and central bank's economic data has been panned out. At one point of a time, there will be a huge hockey stance has been panned out, while at other point of time we see that the doggy stand. So in between the way we have seen some volatile July month, but at the end, the risk assets has outperformed, and among that, we have seen that the Hong Kong were the best performer among the major indices. Let's look at on the some of the Indian macro perspective. What we have seen that, as you can see from the chart, service PMI and composite PMI has been continuously rising while the manufacturing activity has been declining. So majority what we have seen that the growth has been coming from the service sectors, and service sector has been continuously rising while the manufacturing activity has been slowed down. But if we go by the index itself, it has been still above the 50 lines, which is considered as a good for the expansion level. And we are almost last 3 years we have been sustaining above the 50 odd levels, and indicating that we are still in an expansion mode. Another criteria, majorly the RBI look at into the two criteria. One is the inflations and another is the growth side. So first criteria what we have seen is that the PMI activity, that is the service activity, has been improving while the manufacturing activity is slightly on a weakening path. So that was the one criteria we have seen. The another criteria is the CPI. As you can see from the chart, the CPI has slightly moved up just because the last month we have seen that the tomato prices has shoot up just like anything, and that has created some kind of problem for the RBI. Apart from that, what we have seen that earlier there were projections that due to the El Nino we might not get the enough rain, but as per the latest data, we are in a more we have witnessed a more rainfall than the average line. So here you can see that the purple line is the RBI's upper range and the lower range. The blue line is 4%, which is the RBI mandate. So 4% plus or minus 2% is the RBI range. And during in that range, what we have seen that since last couple of months, we have seen that the inflation has been coming down. But as you can see the vertical line, there is a chances that June and July inflations can be slightly on a higher side, while on a 12-month basis, the average inflations will again come in the range of RBI mandate. So why this spike can be seen in the June, July months, and probably by the end of the year, we remain somewhere around 5 to 6% rate. The basic reasons behind the way the food inflations has been rising, and the service sectors service prices has been rising, that has been the basic criteria, basic things which is creating a problem for the inflations, and that's the reason we are seeing that the inflations number can remain somewhere around 6% for the rest of the year. We can see that this downswing in the next year. By that time, the inflations remains on a worry side, and that may be the biggest problem for the RBI as well as the for the uh, for the country as a whole, just because the inflation, if the inflations remains on a higher side, RBI may not uh, uh, give the liberal hands and remain on a status quo to hawkish side. So that's the another point. If we go by the industrial production, as we have discussed in the first chart itself, that the manufacturing activity is slightly coming down, and the here is the industrial production chart, and we can see that the just like the PMI number, we can see that the India's industrial productions output growth likely to slow in the June month. As we can also see that the raw material cost has risen in last couple of months, that can be reflected, and the margin may get compressed uh, in this month's IIP number. So here you can see that the left side is the index. So the index is indicating that we may remain somewhere around 80, and the same the index, you can see that the YY percentage may come down. Back to the RBI policy stance, just looking at the above 3 4 charts, you can easily think, you can predict that the way the inflation is expected to rise, and the manufacturing activity can come down, and the service sectors remain on a higher side. So all in all, we can see that the growth momentum is still on a good side. So RBI can take a risk and remain on a status quo side. Uh, for this meeting as well as in the next meeting, we are expecting that the RBI may not get that much liberal this year, and probably even if in case the RBI may cut rate in the next year, and we remain on a status quo side for the this calendar year. Back to the US CPI side, as we are mainly looking at the two countries. When we are looking USD INR, we have to analyze the American country as as a whole, and India data as well. So both the countries' data we need to analyze before taking into the view of for the USD INR. As you can see that the change in the core CPI is coming down, and estimate is that the CPI can further come down in the US, and that will give some liberal hands to the Federal Reserves, and we may see that the way the interest rate differentials got narrowed in last couple of months, we can see that the some kind of a carry trade may come. Apart from that, one of the things which I would like to discuss is that recently we have seen that some kind of a Russian payments has been happening in the other currencies just like UAE and Chinese yuan. So that's the reason we have been seeing that the USD INR has appreciated, or you can say really has been seen in last 2 weeks. But as soon as the flows get over, we can see some kind of a stabilizations. Some of the corporate dollar inflows are expected next week, so this will definitely support the rupee. But looking at the overall trend on the dollar index side and the rupee side, one should remain cautious at the current level, just because anything can happen. If the RBI may not provide hands in, then we can see some kind of a sharp depreciations. So one should remain cautious in the USD NR while trading for the shorter term, just because there are so many flows are going to hit the markets in next few days. In the last month, we have seen that the Japanese government, Japanese central bank has again started talking about the yield curve control things. And what we have seen that the Japanese bond yield sparked to the level of 0.5%, while they have maintained the overnight repo at negative rate. Here you can see that the timelines of the Japanese government bond yield. Uh, Somewhere in the 2016, we have seen that the Bank of Japan introduced negative rate policy. Then again, we have seen some kind of unlimited bond buying in the 2018. And then we have seen that the Bank of Japan has shifted widen the range of the longer term Japanese government bond yield. So that was the period of some from 2019 onwards to as of now. Again, we have seen that the Bank of Japan set a clear range for the control of the yield curve in the 2021, and now they have widened the range for the longer term and um, uh, confirmed the range on a higher side 0.5% and uh, on a downside on a negative side. So that was the period when we have seen that the rates for the fixed rate purchase operations changed to the 1%, and that's the reason we have seen that the Japanese 10-year bond yield spike to the level of 0.5%. So all in all, as you know that the Japanese is the funding currency, and mainly the flows move from Japan to the Asian currencies and some of the developing currency. Developed market. So that's the reason we have seen that the so many flows has been moved from the some of the developing and developed nations to back to the Japanese market, just because there is a better yield options available in the Japanese markets, and that's the reason we have seen that the yield has spiked and has shown the upward momentum in the Japan, while the outflows has been some of seen in the some of the Asians and developing nations. Going by the sorry, going by the central bank and the recent update of the US uh, uh, US rating cut. If you go by the first, we go look at on the Eurozone, the next meeting will be on a 14 September. And what we have seen that the current policy rate is at 4.25. In last 3 months, the change in the policy rate was the 75 basis point in 6 months, 175 basis points, and in last 1 year they have increased rate 375 basis point. Going ahead, some of the estimates were there. We can see somewhere more 10 basis points hike in next 3 quarters. So that's is the reasons probably we see that the market has started rising, and that there could be some pause in the rate from the ECB once the level of 4.35 achieves. So overall, if we go by the FX YOY changes, the euro has appreciated somewhere around 7.8%. Uh, Looking at the India side, we have policy meeting on the 10th of August, and the most probably the RBI may hold the rate at 6.5%. And in last 3 months, they haven't changed any rate, but in last 6 months, they raised the rate by 25 basis points, and in 1 year, almost 160 basis point rate has been increased. Uh, as said, we do not expect any change before the year end, or you can say that next year. So the policy rate can remain somewhere around 6.5% for the current year, and we can see the rate cut only on next year. If you go by the forex or the USD INR momentum or a rupee move, it has depreciated 2% in last 1 year. Going by the Japan, they have maintained the rate same and expected to remain at the same rate. No change is expected, and they mainly intervene through the yield curve control. Japanese currency depreciated somewhere around 5%. Bank of England has raised the rate somewhere around 350 basis points in last 1 year, and the current rate is at 5.25. Uh, we expect that the current rise in the interest rate can continue for the this calendar year, and can show some kind of stability in rate only in the next year. Going by the forex sides, we see that the 5% appreciations has been seen in the pound. Inflations remain somewhere around 7.9%. At one point of a time, we have seen that the UK inflations were somewhere around 10%. So now the directions for the inflation is on the downside for the last 3 months. Last but not the least, the US will Federal Reserve will meet again on a 20th September, and in that probably the forecast is that they may hold the rate unchanged. If you go by the last 3 months, they have raised 25 basis point, and in the 6 months, 75 basis point, and so for 1 year, in the last 1 year, they have raised almost 300 basis point. Market is pricing in rate cut only in 2024. So far this year, market is pricing in the same rate, 5.5% for the rest of the year. Inflation has been slowly and steadily coming down, as we have discussed in the earlier chart. So the inflation's directions for the last 3 months on a downside, and current inflation is at a 3%. If we go by the dollar index or a major currencies, the dollar has depreciated somewhere around 4% this year. Uh, the recent spike in the dollar index was backed by the surge in the bond yield, US bond yield, and that was because the Fitch has lowered the US sovereign rating by one notch, and current rate has been set at AA plus. So that was the case, due to which we have seen a rebound in the dollar index. However, the trend and directions for the dollar index we can discuss in the later part. If we go by the seasonality pattern, you can see that here we have taken somewhere around 13 years of a price exchange during the August month. This was the 2013, when there is a we have seen that the rupee depreciated sharply somewhere around 9%, and RBI Governor Mr. Raghuram Rajan has taken over the charge, and then we have seen that the rupee got stabilized. This was the period when we are having the twin deficit, low import cover, low forex reserves, some of the growth and inflation related worries. All this were the period when we have seen that in the 2013 kind of foreign fund outflows were the another reasons we have seen that the rupee depreciated, or you can say the dollar index gained somewhere around 9%. And if you go with the last 13-year average, the August remain more or most of the time favorable for the dollar. And we can see that the only in the 2020 and 2021, that was the period of corona during which we have seen the huge FDI and FI inflows, and due to which we have appreciated. So this was an extraordinary period. In the rest of the August month, more or less the depreciations was the trend for the rupee and for the gain in the USD. Uh, Going by the dollar index, this was the period of 2021, the Corona period, 2015 and 2012. These were the exceptional year in which the dollar index depreciated. Rest all of the situations we have seen that the dollar index gain and the average appreciations were 0.35%. So looking at the seasonality pattern, one thing is clear that dollar remains more on a favorable side. That was the seasonality patterns indicating for the last 13 years pattern. But the technical sides is quite different. That we will be discussing in the later slide. First of all, we will discuss on the USD INR. As you can see that the some uh, somewhere around last 10 months consolidations breakout has been seen. As you can see that the since October we have been trading in the tighter range, and then now the last week was the first week we have given a close above this downward sloping trend line. So for the August month, we expect 83.50 to 81.50 is the range, and the breaking out of the 83.50 will give the new level, or you can say that there's some kind of 85 kind of a level. As discussed, as mentioned over here, MACD has given a positive crossover and sustaining above zero line on a weekly chart. You can see that the RSI is also uh, placed well above 50 and hovering somewhere around 57. So all these indicators are indicating that we can move higher. If something goes wrong, USD NR can surpass the level of 83.30 kind of a things. So one should remain on a cautious side. Day by day, we can see that the range get narrows, and if we cross the level of 83.30, there is a higher chances that we can see the sharp upward swing. If you go by the Euro INR, as you can see that the oscillators are still on a bullish sides and flattening, indicating some kind of a consolidations. But if you look at the basic chart pattern, there is a higher of our bottom formation is on a place, and we can see that the horizontal trend line support has been taken in last 2 weeks. Uh, the euro has been holding the level of 10-week exponential moving average as well as 20-week exponential moving average since you can see that the October since start of the October. So one should for the shorter term trader or a longer term trade, one should keep a stop loss of 89.70, which could act as a shorter term support. While on a higher side, we are expecting somewhere around 93.50 kind of levels in last incoming 1 month. Looking at the GBP INR, just like the euro has been holding the level of 21 and 10 days exponential moving average, same is the case for the GBP INR. We are also seeing that the GBP INR has been trading in the upward sloping channel. So as long as the GBP INR is holding the level of 103.50. There are continuations of the trend can remain for the longer term, and down the line we can see somewhere around 110 kind of a level in coming 3 to 4 months. The only thing which is worry for the GBP INR is that the both the oscillators has been flattened in last couple of weeks, and that might be the reasons we can see some kind of a pullback, or you can say some kind of a consolidations to profit booking. So one should remain slightly cautious and keep the stop loss at 103.50 for the short term trade. Going by the JPY INR, as you can see, the direction is still on a bearish side. The basic concept of the technical lower top lower bottom is on a place. Oscillators are as you can see, the RSI is still below 50, MACD is below zero line. So both the indicators and the trend indicators as well as oscillators are still indicating that the directions is on a downside. The trend reversal can happen only above 6130, while on a downside 5670 remains the basic support for the shorter term is concerned. As we discussed on a fundamental sides on a dollar index, we can see that the technical trend and the historical trend are not matching with each other. So we remain some kind of a cautious to positive for the uh, dollar as a whole is concerned. We believe that as long as the dollar index is trading with the lower top, lower bottom, one need not to worry. The direction is still on a downside. For the trend direction, reversal is concerned. If the dollar index crosses the level of 103, then there will be a reversal. By that time, still the trend is on a downside. Oscillators are also on a bearish side. Indicators, just like the MACD, is still on a bearish side. So rather than going for the contrarian trade or looking at the historical pattern, one should remain on a bearish side and keep a stop loss at 103.50 as a reversal point, or you can say that the directions for the dollar remain on a downside. Uh, the Euro INR, as we discussed, it was in a uptrend, and right now also it is in a uptrend. Same is the picture has been replicated in the Euro USD. You can see that the higher top, higher bottom is in place. You can see that the wave is also on a higher side, so tide is still on a upper side. It has been holding the 21-week exponential moving average. Oscillator is still above 50, and MACD is also above zero line. So all indicators are still favoring the bullishness for the euro. And if we go by the CFTC data, also that is also indicating the euro is on a longer side. So all the speculative positions and technical trend is still on a favorable side for the euro is concerned. Just like the GBP INR, we see that the replications has been happening in the GBP dollar. You can see that the rising channel is it has been trading in the rising channel. Oscillators are above 50, but the only concern is that the in last couple of weeks we have seen that the oscillator has weakened. MACD is about to give the negative crossover. So one should remain on a cautious side and keep a stop loss of 1.26 as a near-term support line. And if that breaks, then and then only one should go on a short side. As of now, we are on a neutral side for the GBP INR, and directions uh, is on a bullish side. So one should keep the long positions with the stop loss of 1.26. Though the trend has never, though the trend reversal has not uh, happened yet. So one should remain with the trend and keep a stop loss at 1.26 and remain on a long side. Uh, just like the GBP INR, we have been seeing that the yen is continuously weakening against the dollar, and the same has been happening. The higher top, higher bottom formations, oscillators are on a bullish side. We remain on a bullish side on a JPY, or you can say USD JPY, and one should keep a stop loss at 137 for the USD JPY, and on a higher side one can expect somewhere around 145 to 147 level in the near term. Going by the August calendar, this week we have a RBI policy, US CPI data. Apart from that, we have a UK GDP, India AIP. We have a two holiday for the forex market. One is the 15th and the 16th. Though the equity market will remain open on the 16th. So this week is a longer week and longer month, and there are probably the higher number of economic data which can bring extra volatility in the market. But the directions for the USD INR is still on a bullish side. This is the standard disclaimer, and this will end my presentations here. Uh, Over to you, Samir bhai. Probably there are some technical issues with the Samir bhai. So those who are having any questions can ask the questions. In the right side you can find the uh, question marks symbol, so there you can write your question. While the some of the questions get compiled, we go by the some of the interesting thing which we have seen that 2013 was the exceptional year, as we discussed, where the rupee depreciated 9%. But this time, all the scenario is favoring the rupee appreciations, except the technical. We are having the more than 10 months of the import cover. Our GDP is on our growth is on a positive side and continuously rising. If you go by the inflation number is still under control of the, or you can say in the band of 4% plus or minus 2, plus or minus 2. So that is the RBI mandate. So all in all, if you go by the global front, we as of now we have seen that more than 5 billion kind of inflows in last month, and probably we can expect some more flows to come in the August month as well, just because there are some corporate inflows are expected this in the few coming weeks. So yeah, so now the some of the questions has came. So what is the outlook for the USD INR for the next uh, August month? As you can see that the technical is indicating that we have given a positive breakout. And as you can see that since last couple of month, the range has been getting narrower and narrower. Apart from that, the volatility has came on a lower side. So next 2 months will remain on a higher volatility and on a breakout side. So one should remain on a cautious side and don't go for the contrarian trade. Remain with the trend, and once the level of 83.30 crosses, you can make a fresh long positions. So far, our view is still on a bullish side for the USD but one should keep in mind that anytime RBI may come and some kind of a dollar, they may plus the dollar in the market, and due to which we may see some short-term appreciations in the rupee, or you can say the dollar index, dollar USD INR may come down, but that can be for the shorter term. They might not be able to change the trend or a directions of the USD INR, and so we over here research expect that one should go long above 83.30 and don't make a contrarian trade as long as the 81.50 gets break. So that's the our view, and will we remain on a bullish side as long as the 81.50 holds. Higher side, we are expecting 83.30 remains the biggest hurdle to cross. Uh, so another question is what is expected from the this month RBI policy. We expect the RBI to maintain the status quo in this meeting, and probably next year onwards we may find some kind of a uh, rate cut. So 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 that's what we expect, that the RBI may hold the rate this year, and rate cut can be expected only in 2024. Another question is that uh, you said that after breaking resistance of 83.50, the rupee can fall to the level of 85.50. We expect the 85.50 is the next probable level can be seen, but that will comes a gradually, just because RBI may not uh, allow rupee to depreciate sharply. Apart from that, we are having a huge inflows, and RBI has accumulated huge resource in last few years, and we are still sitting on a 600 billion kind of a forex reserves. If situations get worse, we can see that the RBI may come and restrict the loss in the rupee. So for the time being, 8350 is the biggest hurdle, and if that gets broken, we can see further depreciations in the rupee. But that gradually we can move towards 8550 if 8350 gets break. So here, so I think uh, the most of the questions has been answered, and uh, does it make a sense for us to go for FCNR deposit on US dollar for an year horizon? Uh, so for the yearly horizon is concerned, so yes, you can go for the uh, FCNR deposit, just because we are expecting rupee to see a gradual depreciations, but that depreciations will be on a gradual side, as I said, and as the interest rate differential has been narrowed in last couple of years, and we expect that uh, Federal Reserves to hold the rate for in coming 2-3 quarters, while we expect RBI may turn dovish next year. So rate differentiations is not favoring for the uh, FCNR deposit, you can say. Yeah, but for a 1 year horizon, there might not be that much big appreciations, but ultimately slow gradual depreciations can be seen in the USD. So as we are running out of time, so we'll uh, uh, we'll close the sessions over here. Thank you all, and have a great month ahead. Thank you for joining all of.
Yes, thank you, Dilip. Thank you to the customers for joining.
Thank you.